Well, it's 2 days in a row now that makes one question what everybody thinks they know. Certainly makes me question what I think I know. The jobs report from the Labor Department comes in lower than expected, but the market has been bouncing around up and down. It doesn't seem to know what to do with this brand new news. Anyway, bonds, some are up, some are down. This is a crazy morning. Optimus News gives this Uber bull, your fearless reporter, reasons to think the bot will soon be walking among us. Who knew? Oh, I knew. Okay, anyway, this is Randy Kirk. Hit like if you're excited to get up in the morning and listen to this early morning report. Hit subscribe and notify. I don't even know what's coming up today, later today. I haven't done anything about more programs for today. So maybe you don't want to hit notify because who knows? Anyway, honestly, you got some stuff coming up this weekend. You're not going to believe. You're going to want to hear it for sure. Okay. And then Patreon, you get 7 days free. And I put up my second unique and special thing for just Patreon members, all stuff that'll eventually be in content later. But this is really actually unique content the specific content will never be shown anywhere else but on Patreon. And it only costs you $5 a month. All right. Payrolls increased by 209,000. And that's okay. Not bad. Nothing to shout about one way or the other. Kind of in the middle. Lower than was expected by the people that watch this kind of stuff and who have no clue, but just kind of guess like everybody else does. And the unemployment rate stayed at 3.6%. That is higher than was expected. I would think that under normal circumstances, the market would be totally excited, going crazy. But of course, what happened yesterday? Yesterday was the ADP numbers came out and they were off the charts crazy. And so I guess the folks that are buying and selling stocks and bonds this morning are just confused. They're like, okay, what's going on? This is not the first time that there's been a difference between ADP reporting and the Federal Labor Department's reporting. It happens quite frequently, but this one, I'd have to go back historically. Nobody was mentioning in any of the news reports, but historically, this might be the biggest, most dramatic difference I've ever seen, certainly that I can remember. So we're looking at 200, and so that's causing confusion. I can understand that, certainly causing confusion for me. You got to look at some of these other numbers though. So this morning, initially, pre-market, the market went up because of these low numbers, and then it crashed, and now it's coming back up again as the market is actually open. So a lot of confusion, a lot of people trying to figure out what to do. So let's dig into these numbers a little bit. So the Dow Jones consensus was 240,000 jobs. And a jobless level of 3.6. I saw elsewhere 3.5, so somebody else must have been predicting 3.5. The closely watched wage number, of course, which is what the Fed is paying the most attention to, was up by 0.4% for the month over month, and 4.4 total for year over year. That's stronger than the Fed wants. It is less than ADP said yesterday, which was 0.6. But still stronger than the Fed wants. I'm not sure. To me, I think this number is still too strong, but maybe not. We'll see. Here's what I think people should be digging into. There was another downward revision there was a downward revision for the May count by 33,000. And April's went down again. It's gone down twice now. It was reduced by 77,000. Making the increase to 3.6% unemployment seem more realistic. Brings the 6-month average to 278,000 jobs. That's down a lot from last year's 399,000 average in 2022. So any of that is where we sit right now with the market playing around. I'm going to be obviously giving you an update just before I finish this in a minute with regard to where the markets are going. I'll also be giving you an update with Tesla and what I think might happen the rest of the day. So Tesla is hiring 52 employees for manufacturing efforts with regard to Optimus, including a lead for the manufacturing line development. Well, this would imply full productions within 12 months. and probably sooner, and that they're nearing completion of the basic hardware design. You don't start hiring people to design the line unless you're getting pretty clear on your hardware. Well, you heard it here first. I know that if you've been paying attention to this channel, if you've been watching for months and months and months, which many of you have, is that I've been saying for a very long time that they are building about 1,000 bots by hand this year. Hey, it could be 500, it could be 750, it could be 300. I just threw out the number 1,000 because I believe they need that many to really be training these bots using this new dojo system. And you know that Elon likes to have tons of data. So maybe they're building 1,000, maybe they're not. But that next year they'll build 1 million units and actually send them out to be used. Either they'll sell them or they'll lease them, and it won't just be to their own partners, their own suppliers. It won't be just for their own factories. No, they will be selling or leasing them. I believe leasing them for around $40,000 to $50,000 a month. They'll be leasing these to companies that line up to purchase them. I think there will be a reveal at the AI Day 3. I think they'll reveal the Optimus ready to go at AI Day 3 at the end of October, and that they will actually put them out where people can start applying to lease one. So anyway, that's what I think. That's what I was saying for months and months and months. I still believe that's true because there are no limiting factors. I've had expert after expert on this channel saying there are no limiting factors. There's no reason why they can't train these bots quickly because of FSD. You've got all that FSD capability in terms of neural net training, but neural net training, deep learning with videos, not with just text. Nobody else is doing this. Nobody else is close. Nobody else has even begun the process of trying to catch up with Tesla in this video training. And the video training is what you need for the automobiles, but it's also what you need for the bots. And the bots will be so much easier to train in repetitive jobs. And once you train one bot in one job, it is now trained. The entire system is trained. All the bots know how to put that screw in or attach that bolt. And you train one. So if you've got 1,000 of them or 500 of them or 300, and you have a bunch of guys and gals that are training these bots to do this activity, then all of a sudden you could have hundreds of things that they can do. That's what I believe is going to happen. I've been saying it for months. I believe that the hardware is a no-brainer. Scott Walter has said repeatedly on my channel that assembling these is something you could do in your garage. So even setting up the production line is not going to be that hard. It's not going to be that difficult. But now they got they're hiring a production supervisor to come in and do that. Anyway, you can watch all the videos. The videos are sitting on my channel. You can go back and look at them. They're all 100% still exactly on task. There's nothing new. There's nothing that has changed with regard to those videos in terms of whether bots can be coming out sooner. Well, today, later at noon, if you want to know where I'm going to be, I'm going to be in front of my computer watching Brighter Than Herbert. As Herbert has Scott Walter on, and they've got something cooking. They're just blowing up Twitter with advertisement and teaser after another, saying that there's going to be some kind of reveal today at 12 noon California time. The reveal is going to be that there's something big afoot. There's been a leak, and they are privy to the leak. And Herbert has just been going, wow. That's what he says. Okay, so I want to know what the leak is. We know he says that it is not about this hiring. It is not about some of the other information in terms of in China, the robots are going to be used in the showrooms. It's not about that. Anyway, he says it's something completely new. That's where I'm going to be. They should have called me and told me ahead of time just to keep me from having so many flutters in my stomach. Okay, so Bank of America has raised Tesla's price target to 300. Okay, they've held it. They say they're not saying buy and they're not saying sell. They're saying hold. So you raise the price target to 300, but they don't say to buy. All right. Well, that's how are they basing it? They're saying they're basing it on a multiple of the 12-year earnings they're expecting in 2025. They're expecting $12 a share in 2025. Really? Okay. Well, that's ridiculous.
be so much more than $12 in 2025. Anyway, but it's good. They've raised the price target. Electrek says that the Optimus. Oh, I already told you. Oh, I didn't mention that Tesla is planning to use the robots in their showrooms in China. I don't know if the robots will be doing anything or if they'll just be standing there. I would hope they'd be doing something. It'd be way more fun. All right, and so that was news that I should have put in anyway. You get the point. Tesla, this has been on the news, but I think I needed to report it here. This is important. I'm not sure how it'll play out. Stephen Mark Ryan's got a big article about it this morning, which I haven't even watched yet, just the headline. But Tesla yesterday agreed with a bunch of other Chinese BEV makers to have a truce in the price war. Well, I don't know what this means. I don't, Stephen Mark Ryan thinks it's going to be detrimental to Tesla and that it's the Chinese, exerting pressure on Tesla to ease up. I don't know. It could be part of it. I think it might be part of a deal with the Chinese government to put some more incentives into their program in China because in order to move more cars out. China, of course, is having a really difficult economy right now, but Tesla is killing it in China. I'm not terribly worried about this decision at this point. Not sure what things they can and can't do as a result of their agreement on this price war because they just increased the incentives overnight. We'll be talking about that in a second. All right, from Reuters, this is very, very important. I hope you stayed long enough to hear this. The New York Federal Reserve put out a new report. Apparently, this report's going to be an ongoing report where they are doing a deeper dive into the headline inflation measures, the headline numbers. They want to find out, what's really happening with regard to inflation, so they can make the right decisions with regard to interest rates. Well, in this research series, they're calling the multivariate core trend measure of inflation. It stood at 3.5% in May. It's far lower than the 4.6% rate of increase that is being shown by the personal expenditures, the personal consumption expenditures, the PCE. Their core number was 4.6. This one is showing 3.5, which is a lot closer to true-flation. So that's important. I mean, the Fed should be making a bigger statement on this. Maybe they will be making a bigger statement on this. One of the Fed guys is out there talking. Goolsbee, I think it is out talking today. Maybe he'll mention this report. This is an important and incredibly should be very, very positive. All right. So now we've got the Fed watchers saying that there's a this report went on to say that there's a 68% probability that the number is at near 3%. And another possibility that it's closer to 4%. So, but it's in that range. That would be okay, I think. And things are heading towards the 2% level. Now, let me say this. I've been thinking for a while now that there's a chance that with the economy staying as strong as it is and going even potentially stronger downstream, if the Fed doesn't kill it, of course, then there could start to be some normal inflation in the economy that might be over the 2% that the Fed would like. This is just a thought. This is a passing thought that I've had for a couple of weeks now. It might be that the 2% number we won't get to the 2% number unless we kill the economy, because all of this up and down stuff and the what do you want to call it, the boom bust economy and the supply chain issues and everything else have been creating this inflation. All the money that's poured into the economy, that's going away, but that doesn't mean that we don't have an overhang and that a strong economy might not be creating some expectations of inflation. So that could give the Fed a reason for going a little bit further than they should. I know I'm sounding like I'm defending them now, and maybe I am, but that's a fleeting thought. That's not 100% what I'm thinking, but it's a fleeting thought. I'm just so interested to hear what Cathie says tonight. By the way, that's a big reason to hit notify, because we are going to take a look at Cathie's information on Saturday morning, tomorrow morning. We're going to be looking at Cathie very, very closely. And I'm going to have Larry Goldberg on that show this month to help me talk about Cathie's numbers. So anyway, the Fed watchers are now convinced 88% that there's going to be a 25% basis hike in July, but now it's down to 22.8% think there'll be one in September, and only 36.5% believe they'll hike again in November. This is down a lot, and this is now sounding like they think this is one and done. We'll see how all that plays out over the next few weeks. So Tesla, as I mentioned earlier, is playing with their referral incentives. Please keep in mind, Tesla does not have a demand issue. Tesla is trying to sell 700,000 more cars this year. Almost 100% of that 700,000 is Model Ys. As of 6 months into the year, they are accomplishing this goal. And that's a big task, is to add 700,000 of a single model. There's only a few models in the world that sell over 700,000 cars, and they're trying to add that in a single year. Massive. So the pricing and referral incentive and these marketing efforts are not because of lack of demand. They have to stimulate the demand for a 50% increase in sales during a tough economy. A tough economy here, but a tougher economy in Europe and in China. Anyway, that's a big difference in thinking. I just want you to hopefully keep that thinking in mind. So please go back and watch the interview I did with Larry Goldberg yesterday. There's a card up there. The margins are going to be critical to the earnings report in just a week and a half. The margins. That's what we talk about there on that particular episode yesterday. We came up with two approaches which duplicated each other, came in at a completely different directions, and both of them came with a margin of over 20%. That would definitely make the markets go coming up later. So really quick here. So the NASDAQ is now up nicely in the green. The S&P is now in the green. The Dow Jones is down just a little bit. And Tesla, as it started out this morning, up a couple of points, is still just under at $1.82, but it has come off of its highs of the day. I think that the overall market is going to be a little bit sideways today. I do think that Tesla will regain its footing. I think it will go back up today, probably even going past 280 again, could even maybe test the 285, 286 level again. Will not break through, not a chance. And it'll be till next week when people start to get FOMO about the earnings report that's coming up. And let me just take one more look at the bonds to see if the bonds are continuing to be as crazy. So the 10-year is up 4 basis points. The 2-month is up also, but as it was earlier today, the 2-year is down. So interesting. Anyway, that's all I've got for you this morning. I hope that you'll hit like. I hope that you'll subscribe, hit notify, join Patreon. My second unique piece is up there. Buy the book. That's it. And it's been great talking to you.